Why is this conversation about securing our children's future very, very important, especially in the context of African families?
A lot of us, yes, we think about making money, but we don't think of, making money in my child's lifetime, but what if I exit this earth when my child is 5? In an African context, it's not a very comfortable conversation to think about possibly dying. We are working so hard to make this money, but do we have the right foundation and the right structures to make sure that this money actually reaches my kids?
If I had 10,000 bob per month that I can dedicate to the wellness and the future of my child, and I would actually want to put it in such a way that it's a well-structured financial plan, what would I do with this money? Hi everyone, welcome back to another episode of Finance Friday. I'm very happy to have you here. As per usual, I am your host, Coach Susan. We are shooting at Sarova Pan Africa. If you are around Nairobi or its environs and you are interested in conferencing facilities, or you have a team meeting or a training for your team and you're honestly looking for somewhere that is quick and convenient to go to, please make sure you check out Sarova Pan Africa. Or if you just want to have a lunch or a brunch with a client or a friend that you've not seen, please make sure to also check out. The food here is amazing. The conference facilities are great. The ambience, you will not even realize that you are in the CBD. It's really, really amazing. So please make sure that you check them out for all your hangouts within Nairobi. And if you're not in Nairobi, be sure to check out all the other satellite sister hotels. So today's Finance Friday episode is a topic or a discussion that is very, very close to my heart, especially since I became a parent. So if you're a parent, aspiring parent, or even a guardian, or maybe you even support your relatives' children, this is a very, very important discussion and conversation to have, especially as African families and communities. We are asking a bold but a very important question today, especially in Kasongo's economy, for the Kenyans watching me. Is it really possible to build something sustainable and to create a future and to create wealth for your children with even as little as 10,000 shillings? And the reason why I say 10,000 bob is because in my experience as a personal finance coach, I've worked with people long enough to know that not everyone is, able to afford 100K per month towards planning for their children's future. But I know so many of us can very comfortably afford maybe 5,000 to 10,000 bob. And this is why we're having the discussion that we are going to be having today. So if this is something that you are interested in finding out, how you can secure your children's future in the right way, using the right product with as little as 10,000 bob, keep watching. So I'm joined by my friend and business partner who has now become part of the Legacy Hub Kenya family, Mnyindo from Laris Africa. Without much further ado, let me allow her to introduce herself and tell us what she does.
Thank you so much, Susan. It's always a pleasure being here, and I love to be part of this community because we know the conversations and the impact that we create. Yeah. So my name is Mnyindo, and I'm the founder of Laris Africa, where we focus on the protection and preservation of family wealth. The one thing we've observed over a long period of time, especially for us Africans and Kenyans in general, is we think about making money and creating wealth. But the one aspect we forget is protecting and preserving this wealth. Because making money is one thing, but keeping it is a whole different ballgame. So we help with protecting and creating structures, risk management strategies to ensure that this wealth continues for over a long period of time, and to minimize interruptions in your life. I know about myself, I don't like interruptions in general. Yeah. And interruption in your financial life can bring you so much chaos. So what we're trying to do is to bring families from a point of chaos to a point of legacy by just having the right protection structures in place.
Yeah. I really love this conversation. And today, Mnyindo, I know we've had so many conversations in the past.
Yes.
About protection and about how to actually build a protection portfolio and why that is important. Yeah. But as I said earlier, I think since I became a mom, I don't know, everything in terms of how I view anything in life has completely changed. Y'all didn't prepare us for that.
You and me both. We throw in the deep end.
You know, like we are all thrown into the deep end, and you just because everything now, like everything that I'm thinking about is about him. What happens if I'm not there? How will we actually sustainably put him through school? And honestly, I mean, we would be tone deaf if we didn't talk about how horrible our economy is right now, and how if you're able to actually take your children to the schools you want, not the schools that your budget will allow, is a huge privilege, right? So I think I'd want us to start by maybe addressing why is this conversation about securing our children's future very, very important, especially in the context of African families. And I think I would start by specifically asking, what are some of the financial gaps that you've seen? Because you're a protection specialist, especially like tailor-made for, African families. What are some of the gaps you've seen in how we are planning for our children's future?
Awesome.
Yeah.
Thank you so much for that, Susan. And, just the way you have said, when you have children, something in you just changes. I also remember for me, I was someone who I would have no care in the world. By the way, I'll just live day by day.
Yeah.
But the moment that child was in my hands, I was like, oh my God, life has stopped being just about
me.
Yeah. And there's this innocent child who is highly dependent on me for now, maybe even in the next 20 years. And I need to make sure that their life is not interrupted no matter what. And I need to make sure that they're able to live up to their dreams and their full potential. So now let's even start with the fact that right now we are the main providers, depending on how your family dynamics are. There's some people who could be the sole providers, maybe if you are in a single parent family, or if maybe, there's a stay-at-home mom and there's the only provider husband. And now in that situation, we need to remember that these children are highly dependent on our income. If we do not make money, these children don't eat.
Yeah.
So how do we make sure that there is minimal interruption during that lifetime, right? And then now I'm going to go into the gaps that are there when families are planning for the kids' finances.
Yeah.
So between the age of 0 to maybe early to mid 20s, the children are highly dependent on you. Raising children, it's not a sprint, it's a marathon. It's a whole journey. 25 years is a very long period of time. And then you have to remember, anything could happen within those 25 years as a parent, as someone who's providing this income. So what are these gaps that could happen, or what are those instances that are unforeseen that could happen during this journey that could interrupt our children's lives? So when African parents are planning, I mean, we're all coming usually from a very good place. We're like, you know what, there's this child and I need to make sure that they're okay no matter what. So what do? The first thing we do is now try to make more money, because we believe when we make more money, obviously we'll have more to set aside, maybe for their education or for their dreams, right? But making money is one thing, as I'd mentioned. But then how can we make sure that this money is not going to be interrupted? This income is not going to be interrupted. So the first gap is people just think of making money, but they don't think of what are these things that could happen during our life that could interrupt these children.
My ability to even make an income.
My ability to make an income. So number one, we could lose our jobs. I mean, as I said, 25 years of raising a child, anything could happen. We can already see how the economy has changed, from the Kibaki era to the Uhuru era to now,
we're in the ghetto. Just say it. We are.
So seasons come and go, right? So number one is obviously loss of a job. And we have spoken about how building an emergency fund is very key, especially now when you're putting these things in order to just make sure that, if you're paying school fees, you can still pay the school fees. And number two is, death of a parent. A lot of us, yes, we think about making money, but we don't think of, making money in my child's lifetime. But what if I exit this earth when my child is 5? What happens then? Yeah, that's a very big gap that we do not like to think about. But, in an African context, it's not a very comfortable conversation to think about possibly dying. And it's something that keeps us up at night, thinking of, if I was not there, what would happen to my child? So it's rather we avoid. Yeah. So avoidance to unite. Yeah? So most people don't even think about it. Another thing might not even die. It could be an incapacitation, maybe due to an illness. Someone could get a cancer, could get a stroke, could get a heart attack. During this period when you're creating this income and you're trying to build wealth. So what happens in that instance? Or even a disability, right? And then another very important aspect is people also don't think about how is it that maybe the money is that I've created or collected over this period of time is going to be distributed the right way to the children. So we are working so hard to make this money, but do we have the right foundation and the right structures to make sure that this money actually reaches my kids? Yeah. Because yes, you could have a whole 10 million, 20 million somewhere, but if the children cannot access it, then what is the point of making all this money in the first place?
Yeah. I love that you mentioned 10 million, 20 million, because honestly, like, I mean, my next question really was, in your work experience, have you actually seen, because people think these conversations are for, low income earners, middle class earners, but I have also heard of scenarios where very well earning and affluent families. So you have the money, you have the millions. What have you observed as some of the effects and the consequences of having, like, you have all this money, but there's no proper structure as to how your family will be taken care of? Do you have like case examples or situations, or rather, what have you seen in the industry in your years of experience? What usually will happen when, this doesn't just happen to low income earners and middle income earners. Where are the rich, wealthy, affluent blindsided when it comes to setting up these structures and protection strategies?
That's a very good question, and it always breaks my heart when I just think of the different stories and different people I've talked to. I've talked to enough, especially now, mostly the children of these wealthy parents who did not have structure, did not have a plan. So these are people who have worked high income earning jobs or have had a humongous level of wealth, but because of lack of structures, these children suffered. So let me give a few examples, and then now we can properly now dissect what it is that they went through now from the child. Yeah. So number one, we had, so there's a client of ours. For him, he got orphaned young. So he lost both his father and his mother at a very young age. I think he had not even hit 10 yet. So the parents were doing very well. They had an amazing house. They were going to very, very good schools. You know what it is that we do when you start making a good amount of money and you want your children to get the best of the best. So what happened is, I think the dad died first and then the mom shortly after. So he lost both parents in a short period of time. So he became orphaned. Now, what happened in that situation? Sometimes we think that now the relatives are going to come in. I mean, not all relatives are bad, but this one, he saw flames and fire. So it was him and his younger sister. So the moment his parents died, number one, there was no plan on who's the person who's actually going to live with the children. We never think about it. So even if you're a couple, if you're married, you just think, okay, maybe if I'm not there, my spouse will take care, or if you're not there, I'll take care of the child. But nobody ever thinks about what happens if both parents are not there. So for him, in that situation, what happened is he had to be, first of all, him and the sister got split.
Because one family takes one child, the other one takes the other.
Again, the thing is that maybe someone had not planned to have an extra child, because even right now I have 2 kids. So if someone was to bring me an extra child or even 2 extra children, it's not that I don't want to take care of them. Maybe it was not part of the plan. So obviously there's the relatives who are like, some maybe have an evil heart, but there's the ones who maybe they just didn't have the ability to. Because as you said, in this economy, if you have an extra mouth to feed or an extra 2 mouths, it might not be the easiest thing to deal with, right? So there's the splitting. So for him to split. Number 2, being bounced from house to house. I don't know if you understand what that does to children. They feel rejected. So right now I'm staying with this child And then I think this is where now sometimes those Cinderella stories come in. So if someone feels that because I'm giving you shelter and I'm giving you food, you can't be my maid.
Yeah. Let's talk about it because it's happening. Even now, even in I know a situation right now that is happening. And these are they're people I would consider pretty okay. They're not like struggling, but like their niece is almost doing like housework.
Imagine. And remember this guy, the parents are doing very well. So there's that. Yeah. Now you have these relatives, and now you're being split from, being bounced from house to house because nobody is willing to stay with you. And then number 3, there is now relatives or maybe even friends of your parents, because remember these are children who are under the age of 10 taking advantage of this situation. So they know the level of wealth maybe your parents had, and then now remember, because you did not really choose a guardian, it has to go through the courts. Which is a long process for the courts to make that decision for you. So maybe you in your heart, you know who's the person I could trust with my child, but because you didn't put it in writing, so the court chooses for you. And then maybe they don't choose the person who has similar values or a similar vision as you, and someone who really, really cares for your child as you won't have. And then now in that situation, now with these guardians who maybe don't even care about their children, they now mismanage the wealth that you left behind.
So it could happen even to the best of us, really.
So now you can see now, and now this child, the one, now my client, he told me it got so bad that he was even kicked out of the house and he had to live like a street boy.
And your parents were okay?
And your parents were okay.
Yeah.
So I remember him now sharing that story. I told him I do share. I had to get permission of his shared story, just not to mention his name. But he told me he had to leave as a person who is going to bed because none of the relatives were willing to stay with him. So he had to go and look for money out there to just now get something to eat, him and his sister. And because of that lot of back and forth and how traumatizing it was, because again, we've not spoken about now the trauma of actually losing the parent. So you can imagine there's that aspect that you've lost your parent.
Yeah. Then you're going through it.
There's the trauma of losing the parent. Yeah. The other thing I had not mentioned is the downgrade. Maybe the schools that you're used to, the home that you're used to, that comes now with this whole situation. Now for him, he ended up now losing also the sister because the sister could not handle it anymore. It was so bad. Because now you're in the cold, you're being bounced from one house to another. Then the sister didn't make it. So it was just him who eventually made it, and with a lot of struggle, somehow went through school. He told me one of his late mom's friends saw him in the streets and took him up. And then the rest is history.
Wow.
Yeah.
And I think for me, the thing that really causes me to think a lot is how there's something about the way our African community is set up that makes having these conversations very difficult.
Yeah.
I remember when we did the Shio Summit recently, and I know a lot of the conversations in the room were about how our Kenyan families are set up, of course, because we were doing it here, and how some of the marriages are set up, and how, and as we were getting deep into, these are the possibilities, and this is what we are seeing. We've ignored these conversations for years, but out of every 3 or 5 people 2 or 3 of them can give you a story about how, just recently, I was even having a conversation with my friend who, to date, and their dad died 9 years ago. And all he left was land, by the way, but because of that lack of structure, they are still in courts. The back and forth, right? And so it is very interesting to me how these are things that are affecting us day to day, but for some reason we feel this wacheni bad vibes. Mbona kila saa lazima
But you manifest negativity.
You
What
understand? Yeah. Like it's almost like you are just focusing on the bad vibes, the negative, occurrences. And, it's like, hata ikifanyika si kuna maharambe. Waafrika sisi tunalea each other. So like we'll take, tutachanga, we will take children to school. But like the number of people that have actually done that, but are very few. So I think for me, it's very important that we are having this conversation because, and I won't tire. I feel like we need to have it over and over again until we start realizing that the victim mindset and the victim mentality around this area, or like, we don't need to think about that right now, or we don't have the capacity to plan for that right now. We are just barely surviving. And that's why, even in the next phase of this discussion, I really want us to get into actually breaking down the numbers.
Okay.
I want us to talk about that because my question really is, if someone is listening and they're like, I hear you, I've heard you guys talk about this occasionally, but for me, the question is this even accessible to me where I am right now? So I think I want us now to get into the actual solutions of it using the number I gave you in mind. I really need us to attend to people who can not afford like the hundreds of thousands or the 1 million or whatever. If I had 10,000 bob per month that I can dedicate to the wellness and the future of my child.
Yeah.
And I would actually want to put it in such a way that it's a well-structured financial plan. What would I do with this money that takes into account all of these issues you mentioned and the interruptions of life?
Okay.
Yeah.
That's a very, very good question, Susan. And I think I'll go back a bit, especially now when you're having the conversation on Africans and our mindset. Actually, we have to have a mindset shift, especially around this conversation.
Yeah.
And then we can't keep on forever saying, because our grandparents did it. Surely. So your life is being dictated by most probably someone who's dead and gone.
Yeah.
And maybe the thing is that there's only so much that they had information of by that point.
Yeah.
And it's up to you now to also say, these are the things that we're working out, and that these are the things that now moving forward, we can change the trajectory of our children or our families' lives.
Yeah.
We cannot keep on saying that, okay, just because this is not what it is that is done in our culture, then all of a sudden we're just going to take a bit of a step back. Because having this conversation is part of life. I mean, the cycle of life, there's birth, then there's that whole period between birth and death.
Yeah.
So this is a conversation that we have to have. And if we keep on tiptoeing and avoiding the conversation, that is why there's so much chaos in our community, because we are just staying away from these bad vibes. Look at it, Susan. Like, I love to give this example over and over again, and I know I've said it enough times, is even planning for a trip, and I'm going on a road trip. Obviously, I'll check the car and make sure everything is good. I've parked. I'll even put in my spare tire because, I could get a puncture on the way. But during the trip, am I going to be thinking about how I'm going to get a bad puncture, or
because
I'm going to get into an accident because I carried the spare wheel? See, my job is to focus on the trip and enjoying the trip.
Yeah.
But just in case there's a spare wheel, so I can continue the journey. Because think about it, if I didn't have a spare wheel, or I didn't have a plan of if now there's going to be a breakdown of the car and there's no backup plan, it means I might have to be there for a very long period of time until someone else passes. So I'm hoping for someone, just the way now sometimes we're hoping on everybody else coming through for us. Yes, it's good to be there for each other, but there's also a level of responsibility that has to come to self.
You were even talking earlier on, just before we went live, about how many clients you have. And we both have that are so frustrated by the black tax burden of taking care of everyone else's children. People who are alive and well. Like, you're my sister, you're alive and well, you're healthy, not that you're incapacitated in any way. But because of your lack of planning, unfortunately, I now have to, because these are my nieces and nephews, I have to take care of them, I have to help you out. To the point that some people are choosing to be child-free because they already feel like they have children.
Exactly. Exactly, Susan. And you see now,
Goodness.
the thing is that people always feel like having a personal plan is keeping the community out. But how I look at it, even from my own experience, because I've gone through the death of a spouse, is at that point in time, even the people who loved him and cared for him the most, and they loved us, and I know they still love us, they will not have the financial capability. Who will give me an extra 200 to 300,000 to continue taking care of my kid per month, to be able to pay the rent, to be able to buy food? Yeah. So I feel where a community also does come in is let people show up the way they can.
Yeah, and in their capacity, they're able to.
Because in that time, in as much as maybe people could not give me maybe the monthly income, because again, I don't think it's their responsibility. They could come and pray with me. They could come and hold my hand. They could come and give me that encouragement. Imagine now if I had to give them the pressure of, you need to be raising money for me every single month.
Hata avoid.
Exactly. So I always believe that both planning on a personal level and also allowing community to come with. So this is why, again, we need to redefine what is African, what is this culture. There's some things, as I said, it should not be dictated by your ancestors who maybe are not even here. It's up to you also now to be a new ancestor, right?
You are now the background.
You are now the background.
Your children in 40 years, 50, they'll be talking about my background, where I come from, and that's you. You're the background now.
Exactly. So now let's go into how it is someone can even start with a simple plan. Because at that point in time, when there's an unforeseen circumstance, right? What you need more than anything is money. You need
just get money.
You need money. Let me tell you, when you're sick, you need money. When someone is dead, you need money. When you've lost a job, you need money. Right? So at that point, let's say now we're talking about now in a situation where it's children are involved and we need structure and we need money for this. How is it that now we can create structure from maybe just even 10,000 to start with? So number one, we've already spoken about now there's a possibility or there's a gap where maybe a parent could pass away or get a critical illness or even a disability during these 25 years that you have to take care. It could even be longer if there's special needs kids, right? Because you might have to take care of them for the rest of their life. So at 25, I'm just thinking now your child started schools, finished well, and now they can take care of themselves. But remember, there's very many different situations and many different family dynamics.
Like families with children with autism, Down syndrome. This is lifetime. This person will, even if they won't need you, they'll need a caregiver or a minder for probably the rest of their life.
Exactly.
And that's something you have to think about.
Exactly.
Yeah.
So usually the first step, I always say, is it's important to have some sort of a life cover. I know life insurance for the longest time has been one of those things that people don't fully understand. Because of maybe how it's been sold in the country, or maybe people have been misguided. We've had a whole lot of video on this, so I'm going to get deep into that. But
maybe we can put it down in the description box below, in case you would want to actually now really, really get a deeper understanding of life insurance and probably why you may not like it because of how it has been sold before as education, endowment policies and whatnot. So I'm going to leave that in the description box below so that you can catch up on that first, so that now you can come join us and continue with the structuring our 10,000 bob.
Exactly. Yeah. So number one, getting a life cover. Because we are here putting money for our kids, making money for our kids. But okay, what happens if you pass away when a child is 10, when it's 5? So how are they going to survive? Where's the money going to come from? And as we've mentioned earlier, it's not very, it's not the smartest thing to do to depend on other people, because you don't know at that point in time where people are at, because people are also going through a lot in their own life, right? So a life cover at least can be able to take care of your children, education, their food, their clothes, their shelter, because a lump sum is paid out in the case of your death, critical illness or disability. So life can still move forward with minimal interruption. Because in this situation, yes, there's already an interruption in the child's life because you are not there or you're incapacitated. But please, parents, if I can say one thing, don't let there be a financial interruption.
Yeah.
it takes away from the dignity of these children, right? And it will take them years back. Maybe it will take them a lot of time to be able to catch up with their peers just because of this interruption.
Because of this one thing.
It's this one thing. The chances might be low, but the impact is humongous. So our life cover. So to get started for something even a cover of about 1 million shillings, depending on your age, could even be in the 2000s band, right? So even with 5,000, a lot of our clients could even get a cover, depending again on your age, of like 5 million, 4 million. So that now at least can take care of that income protection. So in case anything was to happen, we know that there is assured money that is going to be paid out to continue taking care of this child. So their lives don't have to stop. Because as we mentioned, what is important when something like this happens is cash. And what can give instant cash? Is the life cover. So even if you have other investments, because a lot of us here are investors, okay, or aspiring investors.
I was coming there. I'm getting there.
Yeah. So what is, as I mentioned, what is the point of having all this and your children can access? So at least with the life cover, you can even start with maybe even with a 5,000 shilling per month. Just put aside and make sure that no matter what happens, there's some money to at least take care of the kids and now pay for their education, their food, and the things that it is that they need to grow up the right way. That's number one. You've given me 10,000, right? So let's say 5,000 I put towards a life cover, and then there is another remaining
5,000.
So the other 5,000, what I will do is I'll put it in a trust fund account. Yeah. So how trust fund accounts work? They work similarly to a money market fund account for those people who already have an existing money market fund account. The biggest difference is with a trust fund account, number one, it doesn't go through the courts. Yeah. Because again, what we said is required is access. Yes, we need cash, but we need also access, right? And number two, it's protected also from creditors.
Oh, wow.
Yeah, so the money that you've put there is protected from creditors. And number three, you can actually give instructions on how you want these funds to be distributed. That's actually one of the biggest reasons why I have a trust fund account for my kids, is because I want to know the moment I'm not there, my instructions can still live on. Because I really, really want to be in my children's lives between 0 to 25, because I feel like it is my responsibility, right? So 5,000 I'll put into now this trust fund account because to open the account is free, but the 5,000 is just to activate the account. So this is money that is growing with compound interest. So with the moment now I put this money aside, the money would be growing over a period of time. So that means even when my kids are 18, they can use that money even for their education. Yeah. And then in case something was to happen to me, I was to exit this stage called life, the money that is paid from my life insurance proceeds, I will make now the trust fund a beneficiary. So instead of the money, because you see, when children are under the age of 18, they can't receive money directly.
Yeah. It would have to go to your guardian.
It will have to go to the guardian's account, guys. For those ones who have, so there's people who are taking covers of 15 million, 50 million. We've had people taking covers of even 100 million. That's $1 million plus. Are you comfortable with this amount of money going into someone's bank account? You have no idea how this money is going to be distributed. And secondly, again, maybe someone could be coming from a good place, but they don't know how to manage the world.
Or they've never managed that much money in their life.
Exactly. And then again, what if now this person maybe is married and they go through a separation? Will that be
married for a trial, I'd say?
So if you want some proper level of boundaries, just have an account for this child, so you know that this money is not mixing with anybody's money. Yeah, it's also not mixing with my own money, because I also have my other investments on the side, but I want my kids' money to be their money, so that I don't mix it up. So the perfect combination is now having the trust fund to slowly grow the money, to grow the wealth, and give that structure, that pot where these life insurance proceeds are going to be received and distributed the right way. So those two. So I'll put maybe 5,000 towards the life cover and another 5,000 towards the trust fund as a way to start.
As a way to create a structure. You know me, I just like to go in. So I'd like to address the elephant in the room. Right now we have special funds, Mnyindo, in Kenya that are, even up to 15% per annum. we now even have like companies that can allow us as Kenyans to even abroad in like markets abroad, maybe even be able to leverage even higher returns. We have bonds, we have SACCOs, we have, especially, like, let me tell you, Kenyans are diehards for three. Let me tell you. Unaona kitu inaitwa shamba maguta. Number one. And these people, I don't know if they've forgiven me yet, because very recently I had a video that made so many of them angry because they're like, you're attacking us for buying land. No, we are not attacking, we are educating. But anyway, so we love three things. We love shambas and rentals a lot, like land and rentals. We also really love our SACCOs.
Yeah.
Let me tell you.
There's someone who has no SACCO.
Right? Me too. I mean, I have a SACCO. Everyone has a SACCO. I hope if you don't have a SACCO, tuone kando. But anyway, so we love our real estate. We love our SACCOs. Actually, if I had $1 for every time someone has come into my coaching room and they're telling me like they have, you know, the junior accounts. Nowadays, you see even SACCOs actually introduce like the angel accounts and the junior accounts for children. You know, at least you can get a quick loan there and whatnot. So I know that's why Kenyans really love their SACCOs. And then another thing now recently, we really love our money market funds. So it's a good thing, right? And then obviously now with the more investment savvy individuals, we are seeing people do bonds, the stock market, special funds, mutual funds abroad and all that. Why haven't you mentioned, like, what makes, you know, because everyone is like, but why can't I put the 10,000 in a money market fund? Why don't I take this 10,000 and put it in my SACCO?
Good question.
Yeah, because there's all these other options. Why specifically why are these two? I know why, but I'd like you to explain that to someone like they've never had this before. Why, for the structure we are trying to create for the protection of our children, whether we are there or not, why choose these two as opposed to the array of the other investments that we actually have? Yeah,
that's a very good question, Susan. So I'm going to start with this. Remember, right now, we've opened a money market fund account. Now maybe we are contributing that 10,000 per month, right, towards this money market fund account. We have been consistent, because we know when we put this money, it's going to grow. Compound interest, eighth wonder of the world. Question: if this parent passes away in year 2, let's even just say year 1, in year 1, year 2, how much has been collected up to that point?
2 years, give or take, 240,000 principals. Now with like the compound interest, I mean, I know it wouldn't be double, so I know it's slightly under 400,000.
So
300 and something.
Exactly. Yeah. So you see now, this is how investments work. Investments require time to grow.
That's true,
right?
Yeah.
So at this point, we say we don't know what could happen during that period of time. So another question you ask yourself: what will 240,000 do for my child? What will it do? Like during that period of time, will it be able to take care of the school fees now in the future? Will it be able to pay the rent? How long will my family and my kids survive with
Depend on this, 240,000.
Exactly. Because you see,
it was simple. Wasa kusema hizo maukweli hivyo loudly.
Yeah, because unajua watu wanatukujiaga, people they come like, I come and I do money market funds because I want to see I have the flexibility and the money is growing. But do you know when you are going to say goodbye? Nobody knows. It's a thought that we don't like to think about, but it's something that you need to actually address because there's people who are dependent on that money and on that income. That's number 1. Number 2, do you have assured access to that money? Because remember, anything that has your name, Susan, the moment you are not there, has to go through the courts.
It's frozen.
Yeah, because remember, yes, there's the whole beneficiary designation when you're filling in the money market funds, but it is not assured that the money will go directly because it's not even anywhere in the law, like the way life insurance proceeds can go directly to a beneficiary. So let's say, yes, you've put your son there, then your mom is like, ata pia mimi nilikuwa na depend on Susan, pia mimi nataka cut. Stop. Has to go to the courts for them to make that decision on how these funds are going to be distributed. So it's not necessarily automatic that the money
go to the beneficiary.
Exactly. So imagine, yes, you've collected 240,000 and then that 240,000 plus interest. And then now it will take how many years before they even have access to that money? By the time they have access to that money, maybe even they've spent even so much more on lawyers. Yeah. Because again, why are we building wealth? Why are we doing what we're doing for our kids? It's so that they can have access. For me, the reason why I'm doing what I'm doing is because I want the freedom that comes with it and the access. There's no point of me building if my children cannot have access, whether I'm there or not. Right? So this is how I look at it. All these funds are amazing. I have my money market funds for, my emergency and, sinking fund for my investments. And then also, putting money in the special funds as well. The bonds, I've done the whole shebang, right? And I'm like, this is to build my wealth. But I also have the knowledge that in case of anything, it might not be accessible. So what will I do? I have a separate fund that is going to ensure access. So you see now, yes, you can open those accounts for the kids, but would they have access to it? You need to always ask even now your providers and to show them, okay, where is it, or even by the law, is it assured that my children are going to have access to these funds? Yeah. So the reason why I have now this other plan on the side is, again, as you said, because of the protection. Because in case anything was to happen to me in 2 years, the life cover that is going to be paid out is the full sum assured.
Yeah, whether you paid for it for 6 months or whether you went the entire 15 years.
Exactly, it doesn't matter, because that's how insurance is meant to work. When you get a car insurance today, if it's a write-off in 2 weeks, the insurer has to pay the whole amount.
Yeah.
So if you choose to save that 70K and not get motor insurance, will that 70K replace your car?
Ramba.
What was third party?
Okay.
So just think about it that way. How can I make sure that this whole amount of money can be paid out in case of anything? But if that lump sum is to be paid out, that 15 million, that 50 million, that 5 million, how am I going to make sure that it actually does what it's supposed to do? So that's where the trust fund account comes in.
Okay.
Yeah.
I think as a financial literacy educator, for me, one of the things that I have realized is important to keep repeating. I think a lot of us have an all or nothing kind of approach to financial planning in a way. So even previously, as I was telling you, there was a discussion myself and Elvis from VUCA had some couple of weeks ago. And one of the things, as I was even looking at the comment section, I realized that a lot of us, the way we understand financial planning is that it is either I do this or I do that.
Just liquidity, yeah.
So I feel like even when it comes to understanding how the protection structure works, it's like someone is like, oh, so it is either I do life insurance or I do the circles or the money market funds. And I think one of the things that I would like to constantly keep repeating is that we are actually not saying that it is either or. The thing we are saying is that all of these things have a role to play in your portfolio, and there are grave consequences to ignoring one of them.
Yeah, exactly.
Because if I decide, I'm just gonna be insuring only, I'm not gonna invest, where will you actually make the money from? Like because investing is supposed to kind of like grow your wealth.
Yeah.
However, now this other aspect of it, when you ignore it, all of this wealth I've accumulated will go to, what do they call it? Unclaimed assets.
Unclaimed assets, yes.
Yeah, I mean, until they're able.
Yeah, as you mentioned, your friend has been there for 9 years.
Do you know? I think something also really interesting I learned since I started talking to you and since I started like engaging estate planners is that the moment like a death certificate is issued like this, all my assets are frozen. So someone will actually have to go to court for my simple money market fund to release my 10,000. For my KCB bank account to give my son or my mom my 2,000. All of that will actually, so I'm like, now you see, we've introduced lawyers' fees.
Yeah.
We've introduced the court process.
My God.
And if this child was to go back to school next term, they're in trouble.
They'll have to.
So I think maybe talk about how quickly funds are really are released, because I think just let's dwell there a little bit, because we are saying, okay, if you want to create a protection structure for your children in the future, these are the two. So talk to us about how do I access funds?
Okay.
Maybe let's start with the life insurance.
Okay.
If I don't have life insurance right now, Mnyindo, I've had you. Maybe I know this is something I need to do. Talk to me about what I need to pay attention to when I'm buying or when I'm getting it. how do I need to do my beneficiaries? What is the duration of time I need to look at? What do I need to take into consideration to ensure that this is something that will actually benefit my children and that I will not get into an arrangement that I think will do something it will not?
Okay.
Yeah.
That's a very good question. So when it comes to life insurance, just like even with investment, you start with the end in mind. Why? Why am I doing this? So yes, we have children who are dependent on us, right? So I need to make sure that in case of anything, there's an amount of money that is going to be paid out and my children's lifestyle is not going to be interrupted. And their dreams are not going to be thrown away just because I am not there, right? So when it comes to life cover, as I said, start with the end in mind. Knowing a good place to also start is what is the level of cover do I need? So usually the rule of thumb is 10 times your annual income. So if my income is say 300,000 or 300,000 per month, annually that's about 3.6 million. And then 10 times, that's 36 million approximately. Yes, that is the ideal, but you can start with what you have, premium. So, but it's good to start with the end in mind because say this 36 million was to be paid out, even if you're to put it in an asset with low risk investment, even if it's a money market fund, they'll still receive that 300,000 per month. You understand? And if you were to work it backwards.
Oh wow, I don't even.
That's how that's how we usually look at it.
Okay.
Because what we want to do is to ensure that continuity. Higher. Remember, every month you're giving 300K. Stopped. Your life has stopped. We need to make sure that 300K
continues. Otherwise, they'll downgrade to whatever.
Exactly. Yes. Now where the life cover comes in, and then again, another thing is which type of life cover to get. So there's different types of life covers, like, there's the term life, whole life. So in this conversation, we're talking mostly about whole life.
The whole life, that is important.
It's important because it lasts the rest of your life, especially for people with young children and maybe are planning to have more, at least you are assured of permanent protection.
And it's an amazing way to leave an inheritance.
I mean, right?
Yeah.
Because we're all going out one way or another, unless you're Prophet Elijah. But you're all going to exit at some point. So how I usually look at a whole life cover is that it gives protection in the short run, especially when the children are highly dependent on me. But in the long run, even if they receive this in their 40s, it's still money in their estate. I mean, as an inheritance to them, they can use that money to do greater good. Right? So usually for this we
recommend the whole life.
Okay. So for how long are you going to pay it for? And again, I'll also share figures, which you can share maybe in the description box so that people can have an idea of the numbers that we're talking about. So the term of payment of cover. So a whole life cover, the beauty about it is you pay for a period of time, but you're covered for life. So pay for term, but covered for life. Perfect. So what can determine the time period you want to pay this cover for? Let's say don't pay it past your retirement.
Yeah, because where you're getting the money to pay the premium.
Exactly.
Yeah.
And then also for the people who maybe want to finish paying these premiums faster, yes, you can choose to pay for 10 years, but the covers are a bit more expensive because you're paying for a shorter period of time. Yeah. So it depends on where it is that you are in life. If you're like, I just want to finish in 10 years and be done. But majority of our clients pick between 15 years and 20 years payment of this premium. Yeah, because you can pace yourself and you know that within those 20 years, there's an amount of money I'll be comfortable to set aside for that period of time. And then also when you're getting a whole life cover, advisable to have maybe an emergency fund on the side so that maybe if you're to lose your job, you still can't be able to pay for premiums.
Pay for premiums.
Like insurance, you have to pay the premiums. You cannot.
There's no getting out of it.
Just think about it as a subscription.
It's like rent.
My rent, by then it's like a subscription. If you don't pay, you don't have services. Yeah. And then another thing to put into consideration, it's good when you're choosing an insurer to always ask what is the grace period of this cover. It ranges anywhere between 30 to 90 days depending on the insurer. Grace period means that this is the amount of time maybe I've not paid for this cover, but I'm still on cover. So even if I'm to pass away during that grace period, my family will still get
something.
But maybe minus the premiums that I've not paid in that period. But at least it's something. So the longer the grace period, the better. Another thing, it's good to look at what is the claim settlement ratio of this insurer. will this claim be paid? Because actually a very big fear of Kenyans is this claims will not be paid.
I love that you mentioned it, because every time I talk about this, even when I talk about like the critical illness disability cover, there's always going to be someone in my comment section with a horror story, a real life experience they went through. They had actually paid premiums. And like this critical illness came up, it wasn't paid. Someone got a disability, it wasn't paid. It's almost like, in fact, kuna chanamea Susan kazi insurance ni kuruka story. Like if they can find a loophole, I mean,
no, I understand.
It's what people feel,
It's understandable.
So I love that you mentioned that the company matters.
Imagine, you're putting money for 20 years.
The company
Is this company
matters.
going to be in existence in 20 years?
Yeah.
So it's always good to look at the company's books. And then also, the financial strength of the company is so critical.
Okay.
But life insurance, in general, is very protected, though, in general.
Yeah. Okay.
That. And then another thing to look out for, ask for reviews. Honestly, just ask whoever it is who is selling you a plan to just give you also examples and reviews. Ask around. Or again, it's also important to interview your agents.
Yeah.
Just don't go with the first insurer that has presented to you. They've come to your office, then you just like, ni huyo. So that is another thing to look out for. And when you're getting a life cover, please take always remember to take your time to go through the policy document.
Yeah.
The reason why a lot of people have been burnt is because they never understood what they were buying. There's usually a 30-day window period from the time you buy this cover that you can sit down to just check, is what the agent told me and what is in this contract, are they like this, or is this person oversold? Yeah, because again, when you have those 30 days, you'll know whether this is something that's right for you. So you can sit down with it, and if you have any questions, that is the best time to ask the question.
So actually,
because if now you feel like your agent missold you, you can always get your money back within those 30 days.
All right.
Yeah. So those are very important things to look out for when you're getting now these life covers. Just always ask a lot of questions. That's why we are here. So in case you have any questions, you can always come to us. We leave our contacts with Susan and we can be able to guide you.
Yeah. How quickly do you get the money from a life insurance?
Usually 10 to 14 working days.
10 to 14 working days.
With paid claims.
Yeah.
Seen people being paid within that period of time.
Upon presentation of the death certificate, of course. Yeah?
Exactly. So there has to be a death certificate. If it's a death, there has to be a death certificate. You have to fill in the claim form. And then you have to bring obviously the ID of the beneficiaries.
Unajua juzi kuna mtu aliniambia at the point of death, the person with the original ID and the person with the original death certificate is the most powerful person.
And that's why people usually go and fight for the death certificate and the ID.
My goodness.
They go and fight for the ID and the death certificate because you are holding a lot of power. You have the way like a marriage certificate. That's like it's a proper legal document.
Yeah. Okay.
Yeah, it holds a lot of power.
Yeah. Mnyindo, now I think I want us to mi napenda namba zake.
Sawa.
So I want us to go through like a brief demonstration of how far this 10,000 would take you. So maybe guys, at this point, we would like to actually take you through. You guys know I keep my promises. We'd like to take you through very, very quickly. If you had this 10,000 bob, and you want to actually do this kind of like protection and structuring for your children in such a way that whether you're there, whether you're not, no shenanigans will happen, no relatives will come in. What can you actually do with this money? So we are going to look at, if you're going to maybe be doing this for your child until maybe they're even 14 years of age, 15 years of age, or even up to the point of they're already adults at 25 years of age. Let's just see what 10,000 would be able to do for you in terms of numbers and what your child would actually be looking at if you actually decide to set this aside for them.
If we only have a budget of 10,000 shillings per month to put towards this plan for your children, that means you want to set up a trust fund account and at the same time put aside a life cover to just make sure that no matter what happens, your children's lives are not interrupted. How exactly can we split it? How exactly can this look like now when it looks at the numbers? So we are going to work with a legacy combo of 10,000 per month. That is life insurance and trust fund. So the first step is to now open the trust fund account. We're going to start with 5,000 shillings, which is the minimum to open a trust fund account. Remember, this is an amount of money that is going to be credited into our account because to open a trust fund account, there is no fee associated with it. Yeah. It's just 5,000 is required to activate the account. So out of the 10,000, I'll put 5,000 shillings towards the trust fund account. And this trust fund account is now like this central pot, which is meant to protect our children's money. And again, you can use it to now save up for your child, whether it's their education or startup capital or even house down payment. Think about it as paying it forward. This is an account similarly, as I'd mentioned, to a money market fund account. The biggest difference is the fact that this one does not go through the courts, unlike money market funds account, and the funds can be distributed according to your wishes. So think about it again as a central pot that has financial and legal protection. Yeah. And let us look at projections. Remember, now you've opened this account. Let's look at baby Tom. The parents opened this account when he's only 0 years old. And they decide to contribute for this towards Tom's maybe university education, or it could even be startup capital, or just to gift him. And they are looking into contributing about 5,000 shillings per month. The rate of return is usually about 12%. Remember, this can change because it's dependent on the market. It can go even sometimes to 11%, and we've seen it go as high as 15%. And we're looking here at a term of 20 years. So if Tom's parents were to contribute 5,000 shillings per month for 20 years, the total that will come is now the 4.9 million, which is the contributions plus the interest, right? Now let's look at Anne's parents, who can contribute a bit more, 25,000 in this case, still at the interest of 12%. You can see here for the exact same 20 years, Anne's pot will have 24.7 million. So obviously, the more you contribute, the bigger the amount that is going to be received at the end of the day. So think about it as a way of growing your children's pot and a way of gifting them something that grows with them, because money is always going to be beneficial at whichever point in life, right? And then the other thing we really need to put into consideration is, remember, yes, you're contributing this 5,000 shillings per month, but what if this parent dies in year 5? Remember, what would have been contributed is those 5,000 shillings times 1 year, which is going to be 60,000 times, year 5. Let's say now it's going to be, the 300,000. So most probably it might not be enough. Let's say if they are looking into the education of this child, right? This is why it is important. Now you'll see shortly where life insurance comes in. And then remember, the life insurance is going to be paid out into this pot to just make sure that there is no gaps. But we're going to look at that shortly. And how does the application process look like? So first of all, it's pretty simple and straightforward. You fill in an application form with the requirements or what it is that you want to be done in this now trust fund account. So you fill in like, okay, this is what I want it to be for education. I want it to be used for upkeep. I want it to be used for medical care. It's literally up to you. Yeah. And then you have to send in the requirements, which is your ID and KRA PIN. And then also you need to send the guardian's ID and KRA PIN. This is the person who is going to be more or less taking care of your child. So yes, the funds are not going to go to the maybe guardians directly, maybe accept upkeep money, but it's still important to have a guardian, because if anything happens to you before the child has hit 18, there still has to be an intermediary. And in this case, the trustee is a corporate trustee. It's not a person. So the trustee will do according to your wishes, whatever it is that you have stipulated. And then there is the beneficiary's birth certificate or ID. So if they are under the age of 18, we need their birth certificate. If they're over 18, we need the ID. Proof of payment, 5,000 minimum to open the account. Grant letter, which is stipulating all your wishes, is sent back to you for signing. So just always go through to make sure everything is okay. Then the trust fund account is open. This whole process takes about 5 to 7 working days. And then after that, if you already have existing life insurance proceeds, you can update the beneficiary to the trust fund. It's important to note that the trust fund contributions are flexible. You cannot be penalized if you do not contribute. But if you have a specific goal, please continue sticking to it. If you said you want to do 5,000 per month, just do 5,000 per month. If your situation gets better and you can do more, you can always do more. Some people, because they're very tight in cash, you can open the trust fund account. And then when you're ready to continue, you can always continue, right? So secondly, Remember, we've already seen where the first 5,000 goes. Where does the next 5,000 go? We're going to direct it to life insurance. As I'd mentioned, it's important to note that sometimes a parent might not be able to live the full 20 years, the full 15 years. Remember, life is a marathon and anything could happen in between. So we need to make sure that there is something that could fill in that pot in case life is to happen. The reason why we are opening this combo account is to make sure our children's lives are not interrupted, especially during their formative years. And whenever it is that they are dependent on us, whether it's for school fees, for medical care, for education, we need to make sure that they are well taken care of. So life insurance to replace your income. In this case, we're going to use what we call a whole life cover. That means this is an insurance that lasts for the rest of your life. So how much cover do you get with 55,000 shillings per month? Let's look at Anne here, who is the age of 30, premium of 5,000, and she is a non-smoker. For this 5,000, she can get a benefit of about 7.6 million. Yeah, and critical illness protection of 3 million. That means if she was to get a stroke, a cancer attack, there's still a payout, right? And then an extra accidental benefit if she was to get an accidental disability of 3 million. And she's paying this for 20 years. So it means if she starts now at 30, she stops paying at 20, but this cover is ongoing for the rest of her life. Say she passes away in year 5. Yeah. So what is going to happen is this 7.6 million is going to be paid out, because remember, it's insurance. It doesn't matter when it is that you pass away. We need to make sure that this amount of money is going to be paid out so that the children can continue and without any interruption. So remember, we've already opened the trust fund account. So this 7.6 million is going to be put in the trust fund account, and it's going to continue growing with compound interest. And then remember, in the trust fund account, you have left your instructions, whether it's school fees, medical care. So it means it will still continue taking care of your children. It's like an extension of you, right? A clone of yourself. And you can see here, for the exact same 5,000 for a 40-year-old, it will give them lesser benefit because life insurance is dependent on age and also your smoking status and how healthy you are. So you can see here they're getting a 4.6 million shilling life benefit and a critical illness of 2 million, accidental disability of 2 million for the exact same term of 20 years. So I would encourage you to get this cover as young as you can, lock in the amounts, and then you're covered for the rest of your life. Imagine if you're 25 and you get a cover that you're going to pay for the next 20 years or even 15 years. So if you're 25 and you're paying for 15 years, you'll have stopped by the age of 40 and you're protected for life. And you'll have locked that policy in when you're still healthy and you're still young. The issue we're getting now is people are coming to get some of these covers when they're older. It's so expensive. And then also, it is now hard to get in because the insurer has to accept you. So let's look at this. Yeah, let's look at a proper breakdown of this life insurance. So for Anne, remember she's 30, and because of the 5,000, the cover benefit she's getting is about 7.66 million. And then there is a projected bonus of 2 to 2.5%, usually to cater for inflation. And also now to encourage you guys to live as long as possible, right? So 7.6 million is the base sum assured. That means if someone passes in 1 year, in 15 years, the 7.6 million has to be paid. But then for every year you are alive, there's going to be an additional, in this case, 153,000. Yeah. The 2% of 7.6 million, which is going to be added to this policy every year. It could go higher, it could go lower. It is dependent on the company, but this has been the average. And then that means that in this case, if Anne had passed away in year 5, the children, the family will get the 7.66 million plus the 153,000 times 5, right? So it means the family will get about 8 point something million, right? So you can see now it will also now cater for inflation. And then there is a tax relief. There's tax benefit definitely when you take a life cover of 15% of the premium, to a maximum of 60,000 per year. So, 15% of now the 5,000 shillings times 12, that comes to 9,000 every year. And then yes, it does have a waiting period of 6 months for illnesses, and there's no waiting period for accident. That means if someone was to pass away due to an illness within the first 6 months, the insurer will just, return the premiums. But after 6 months, the life cover now kicks in. Just the way medical insurance has waiting periods of a year. Yeah. It's just also to make sure that we're protected from fraud, because there's some people who have terminal illness and they come in to get life insurance policies knowing that they're going to pass away within a couple of months. And then, is there a medical test required? For this policy, no, because it's under 8.5 million. But if you're going to take a larger policy, medical tests are required. Yeah, because remember, life insurance is also dependent on health, and the insurer wants to know the level of risk they're also getting themselves into. So the medical tests to expect are usually like the blood work. They check for cholesterol, blood sugar, HIV. They do a urinalysis test and an ECG test to check your heart. So please always make sure you're keeping healthy, keeping fit, eating well. Yeah. And remember, the tests are paid by the insurer. In this case, the term is 20 years, as we'd mentioned, and the payout is only to the beneficiaries. So why is it an assured payout? Because everybody one day will die, right? So for sure, whenever it is that you're going to be transitioning, the family will get the sum assured plus the bonuses accumulated up to that point. And then secondly, as we'd mentioned, this policy also has living benefits. That means that you can use it when you are alive. In the case of a severe illness, sometimes this cancer, the strokes, your medical cover might not be enough. So we need a lump sum payout, because life insurance pays out a lump sum. Yeah, because the 7.6 is paid out as a lump sum, the 3 million is paid out as a lump sum. In the case of any of these illnesses, let me mention them: cancer, heart attack, open heart surgery, stroke, paraplegia, coma, kidney failure, aortic surgery, major organ transplant, Alzheimer's disease, blindness, motor neuron disease, multiple sclerosis, muscular dystrophy, renal failure, replacement of heart valve, and rheumatoid arthritis. These are illnesses which can end up being so expensive, and you might not be able to continue working because of this illness. And at least if there's a payout, it will still be able to pay some of the house bills and help with now medical bills as well. And then here, there's the extra accidental benefit protection. In the case one is to get into an accident and they get totally and permanently disabled, there's that payout of 3,000 shillings, right? So always remember, the trust fund is a pot, yeah, to just make sure that no matter what, your voice has been heard, because that's where you put instructions. But sometimes we also need to make sure that this amount of money that's going to be paid out by the life insurer, in the case we're to pass away when our children are still highly dependent on us, can now go into this pot. Because this 7.6 million, if you do not have a trust fund, it means it will go to the guardian. And if your guardian is not responsible or they're greedy, the whole 7.6 million is going to be spent. So we also have sheets that we have pre-calculated sheet for the whole life covers. Say, for example, you want to know approximately how much it is that you want, or maybe how much it is that you have and how much level of cover you can take. This we're also going to share in the description box so that you can have an idea. You can see here for 5 million shillings for a 27-year-old, if they are going to be paying only for 10 years, remember they're paying for 10 years, but they're covered for the rest of their life. With a sum assured of 5 million, critical illness of 2.5, accidental of 2.5, they only pay between the age of 27, they stop paying at 37, and then they're covered for life. If they choose to pay for longer because they want a smaller amount of premium, you only have to pay 3,598 for the exact same level of cover. And then now you can come down here and just try the different sum assureds. Just look at your age, because this goes from 18 to 60, which is the maximum age entry. And then the terms can go from 10 up to the age of 65. So yes, all this is going to be in the description box. Even applying for this legacy combo is going to be in the description box. I'm urging you to protect our children no matter what, and to make sure that they have an advantage in this life.
So now that you've gotten a chance to see what 10,000 bob would actually do for you, you guys let me know in the comment section. I know it is super exciting. The first time you did this math for me, I think you sold immediately. I was just like, where do I sign? Where are the papers?
Yeah.
But Mnyindo, I mean, realistically speaking, again, maybe someone is not able to do the 10,000 per month because, again, me, I'm on the ground doing budgeting with people every day. Yeah. Sometimes I know at your 10,000 ni shida. So if someone can have 5,000 bob, for example, like I don't have 10, I can't even get to the 10, but I think I can push myself to a 5K.
Yeah.
What are my options?
Okay. So let's do this, Susan. I'm going to give you guys a trick. Yeah. Number one, you can open a trust fund account. You can open just so that you can have that pot in existence. Because remember, when you put that 5,000, just like a money market, you can even just leave it there, but the pot is existent. Remember,
and it's earning interest.
Yes.
Yeah.
So we've already created the structure because when you get started, start with that 5,000, and then the money it is that you have, you can now get a life cover. Because remember, maybe that 5,000 that you start with might not be enough, but at least the pot is already existing. But now you can redirect that now money to get now a life cover until maybe now things open up. So it can be like, okay, right now I don't have 10,000 to put aside every month. But if I have 5,000 aside, step one, I'll just open the trust fund account. Step two, now moving forward, I'll have a life cover and make the trust fund account the beneficiary.
Oh, wow.
So in case anything was to happen, at least money, there's already an existing pot, because they cannot shut that pot because there's money inside. So that's what it is I would advise. And then now, do you remember, because with the cash management trust, the trust fund accounts, the contribution is flexible. So they're not going to come and tell you, oh, now you've been penalized for not contributing towards the trust fund account. So you can just be like, okay, let me just open the account so that there's a place to receive this money, whether if maybe it's 5 million because you took the 5,000 cover, or 4 million, but there's a place to hold this money for the benefit of the children. And then you continue paying the life insurance process until the time, maybe, as I said, things are getting better, and now you can even now start contributing into the trust fund account.
Yeah. I love that. Do you know what I love about that recommendation is the fact that a trust fund is as flexible as a money market fund is. So if this month I don't have money, well and good. There's no penalties. If I skip 17 months without funding, well and good. If I'm able to do 3,000 this month, 5,000 the next month, I mean, it's just very self-paced.
Exactly.
So I love that. So guys, if you just want like a simple structure outside of what you already know, your MMFs and SACCOs, and you only can afford 5,000 bob, the first option is our trust fund. Then if things begin to open up now and you're able to pay a consistent premium for your life insurance, either because your business has become stable or you now have like credible or rather dependable employment income, then we can get into the life cover. Then eventually now even the life cover can pay into the trust. I love that. Now, since si kila mtu akona mashida kama sisi, yes. You know, fortunately or unfortunately, in this same economy,
these people are making it secular.
There's people who, you know, maybe you can even set aside as much as $1,000 every month, 100,000 plus every month. Maybe you even have real estate income. What are the options for structure for, you know, wealthy, ultra wealthy, affluent individuals that are like, okay, I had you. I think I have all these other things, but I've actually not considered how I can structure this so that my children will actually benefit from all this work I've done and all this wealth I've amassed. What does that look like for them?
So I'll give an example, because we have a client who's doing very, very well for himself. So what he has done, number one, because his children are going to schools which are like 2 million a year.
International school, of course.
Yes. So obviously, when we're getting started, just the way everybody is starting, just now the life cover and cash management trust, and then I'll explain how we can go even further. So for him, he just wanted to make sure that his kids, obviously, if you're going to be paying that amount of money in school fees, you need to make sure that you are really protected. Because one thing I get shocked every time is people who are taking children to schools which are $1 million a year, $2 million a year, and have absolutely no protection. Question is, who is going to continue paying for that money if you are not there, right? So yes, number one, you can still get now a life cover. We've had clients who take $1 million policies. So they are paying, especially when you take it young, you could be paying maybe anywhere between 80 to 100,000. So people who are getting covers of 50 million, their premiums are about maybe just under 40K.
You know, one of the best things you did for me, Mnyindo, that I will forever just bless the Lord for, is getting me into life insurance in my early 20s. Okay, well, late 20s, actually 25, late 20s. I see the premiums for people in their 30s and 40s for the same amount of money. I'm like, ni vizuri nilianza mapema.
Exactly. So for them, where they're coming from, because remember, they have all these other investments, which I'll get into. But for them, they need to make sure that there's instant liquidity. What we said, when there's children involved, what they need is access and cash. You understand, access to that cash. So he did get that Because over $1 million, like about $1 million, right? Of cover. So him is paying like about 200,000 a month for his age. Yeah. And the other thing he did, because he wanted to create structure, because he's also in a blended family situation.
Okay.
He got a trust fund so that in the case that amount of money was to be paid out, it does not go directly to the guardians because the children are young. So the money is going to go into the trust fund account. And he has put instructions that in the case he is not, that the money is paid directly into the to the school institution. Because some people will be like, "I 3 million apana."
Kununua Range Rover na hiyo pesa. Ngoja tu. Do you know African families?
Exactly.
Taenda Roysambu primary alafu mimi ninunue gari.
So he wondered and he said, so for him, it was like just for his own peace of mind. Because even by the time he came to us, it was because one of his friends died.
Yeah.
And he saw the chaos that came because, they're going to the same school. The children are going to the same school. And how the children could no longer, like the school fees could no longer be paid. So he was like, wait, I need to put my affairs in order. So he got that life cover. And then he opened the trust fund pot. He is also using it to now put money aside consistently towards the kids' education. And then I'll tell you what he's using his investments for. So this one, in his mind, is just for kids. Like whether my investments go well, they don't go well, there's this account that is for my kids. And then another thing to investors, and advice to investors, because most people are like, no, I'm looking at it from a returns perspective. For me, how it is that I look at it, the reason why I'm able to take a lot of risk also in my business and investment is because I have peace of mind. My kids are good.
Yeah.
When I have, that's one extra headache that is away from me, so that now I can be able to take more risk in my business because I know no matter what, my children are fine. You know that what that does to our parents?
Yeah. It even makes you bold.
It makes you bold. You can be like, you know what, I can do this, and even if I to lose, I know my kids are okay.
And I think that's so important because I feel like one of the arguments I've also observed or witnessed is that, is this a returns game or is it a structured game? What are you really looking for in a trust fund? And what are you really looking for in a life insurance? It's not like the highest return in the market, really.
The trust fund,
it is the structure that will give me the most safety and access.
Yeah. Because you see, in life, it's a combination of risk and now security.
And you have to diversify for both.
Exactly. Because what a life cover will do, a pure life cover will give you very big protection for a small amount.
That's true.
What a trust fund account will do, yes, it will create that pot to ensure proper distribution of this cash when the time comes. And actually, the returns have been okay lately, like 12%, 13%. So it's been doing a bit better. So, and it's just a good combination of what, but mostly because of structure. And then now for the other investments, because he has a business, he has, rental properties and all of that. What we advised him to do is now set up a family trust for that. Yeah. Because I also have both. Yeah. I have had to do the cash management trust and life cover to ensure that the money is managed well. That's my biggest reason is for money management. Comes to the cash management trust because the trustee is a corporate trustee. So I know my voice will continue based on my instructions, whatever it is I've put in. That's why I keep on saying that this legacy component, the life insurance and trust fund, is a financial clone of myself. My children will not stop having or eating just because I already have this plan in place. My investments are for my lifestyle. Yeah.
It's for Dubai, y'all.
So my investments are for my lifestyle and to build this wealth. Yes, for myself right now, because I'm alive now, so need to enjoy my life, but also for my kids later, because this will also form part of the inheritance, but mostly for our lifestyle now. Yeah. Because investment with the returns, I can be able to live a certain life that I want to live. Yeah. So now those ones, he has put them, now he's working on putting them under our family trust so that even the moment he passes away, for him, he said that he wants minimal chaos. Because remember, it's a blended family. Yeah? So he doesn't want people to be fighting. He wants it to be very clear. The structures are very clear. In the case of now, anything that requires money, there's the cash management trust and the life cover. Now, all these other assets, because, a trust never dies, so it means it will never have to go through the courts and the matters are private. So he is now putting all these other things under a family trust. So for people who are, who have the capacity to put money aside, because to create a trust is about like 300,000.
200,000. Yeah. The family
trust. Yeah.
Or just even an individual trust.
Exactly. Yeah. So whether you have a family or it's you by yourself, you need to have that amount of money to start. I think that's when people think of trust fund, that's the number that comes to their mind. But this is a good place to start. But eventually, if you have any other assets, like you have the money, the land, just please strive to get to this, because what it will do is to save you so much money. See, I've gone through the courts. Yeah, it's not cheap. It's not cheap. So you put this 300,000 aside because in the future your people will not have to pay millions and millions, and you will not have to fight for your stuff.
Yeah. Yes. One day, if you allow us, I will host you on this channel.
Yes.
For us to just talk about your experience in the court.
Girl.
When the matters are done.
Yes. Yeah, I'm telling you.
You can't discuss something that is already in court. But once you're done, because your story opened me up a lot in terms of just where we don't know what we don't know.
Yeah.
Until it happens, we don't know what we don't know. Yeah. In conclusion, Mnyindo, this is the last question, I promise. I know nimekuuliza maswali 1 million leo. Can we talk about this issue of guardianship?
Yeah.
It's like another episode. It would sit another sip your water.
Sip my water.
I mean, I don't think we would be doing this conversation justice if we didn't talk about guardianship, because these two products actually need a guardian. For life insurance, if my son, who's like now 1 year old, is my beneficiary, because they cannot give a 1 year old money, I need to actually put who the guardian is to receive this money on their behalf, if it is not a trust fund. Yeah. The trust fund itself requires that, okay, fine, me and the father are settlers, we've set it up, but we still need to appoint guardians, right? A principal guardian, and I think an alternative, secondary guardian. What are some of how would you advise us to look at guardians and to maneuver guardianship? Because mi sijui kama wewe unaambiangwa, but mimi nikikoach watu na tukifanya all these discussions around money, if I had $1 for every time someone has told me, Suza, there's no one in my family, no one. Mimi niwaambia niko na 1 million mahali unajua brothers wangu wewe. Do you know? So maybe demystify for us who a guardian is in the case of a life insurance, and how would you advise, like for you, how have you gone about it? I mean, like for us, we chose guardians, and it's not that actually this is not for a lack of trust in our family members. However, it was just like just a decision we made. Like for us, the godparents to our child are the guardians. They're not family, they're not whatever. And it's because we have so many money conversations with them. So we even know our money philosophy and theirs is like aligned, right? So how have you done yours, maybe, for example?
So, first of all, when I started out, I just started with the life cover by itself. But remember, the moment the children are under the age of 18, if anything is to happen, they cannot receive.
They can't,
And if you did not pick maybe a guardian, or you didn't put beneficiaries, it will have to go through the courts, which beats the purpose of a life cover in the future. So there's designation for these things, so it's good for you to put it down. So yes, obviously made my children the beneficiaries. And then now when it came to the guardians, now I picked the people closest to me, because what would have been ideal is for me to pick my husband, but he's no longer there. So and now I had to pick now my siblings, parents, to be able to take care of my children, because they're the ones who are constantly there with my kids. So I knew that if anything was to happen to me, these are the people who live with my children. So when I'm thinking of a guardian, I'm like, who's the person who I trust the most
with my child?
My child, who will live with my child and still give them the love that I also give them. And then also, who is this person that my child is also comfortable with? Because sometimes we look at just one way around, but we don't look at when this person comes home, how is my child around this person? Are they comfortable with them? Right? Secondly, another very important aspect, just as you've mentioned, you look at the values aligning.
Money philosophy is so powerful.
Exactly. So another very, very important aspect is to know what are these values of these people. Because the moment there's clashing values, that means that even when they raise your children, they'll not raise your child with the values that you had or you have at this point, right? And then it's also very, very important, again, as I said, there's the people you trust, the people who you have similar values, and to some extent similar vision, like similar mindset. Because again, we've had situations where someone has picked a guardian and they don't really believe in the children going to specific type of schools, international schools. So the moment now the guardian came in, they're like, why is this child going to such an expensive school? So we can just now take them to a different school, and then this money can be used for something else. So this is why now you have to pick a guardian who somehow you have similar mindsets and visions even for the children. So now when it comes to life cover, because the children cannot receive the money directly, that is how now you have to choose the guardian, because the money goes directly into the guardian's account. But as you said, sometimes that can be a risk, because yes, you could have picked someone you trust, but sometimes you don't know how people can change when money is. I remember there's a situation where someone you know, the money was received by the guardian and they used it as startup capital for business. Right? It's because that is not even shocking. Maybe now their business is not doing well during this season, and then there's cash right in front of you.
Imagine 10 million
imeingia. What are you going to do? You'll be like, let me just spend this money and then I'll give it back.
In fact, let me invest in the business, then this business will be paying.
Yeah, typical. It could be someone who cares about your child, but they don't even know also how to manage money. This is now where the trust funds came in.
Trust funds, they are too late. They came too late. Because now with the trust fund, it's so easy.
It's so easy.
Yeah, because no, my auntie, uncle, cousin, brother does not have to touch this money. Exactly. They just have to bring invoice ya shule invoice ya health insurance.
Exactly. You see, so you see now with a trust fund account, there still has to be guidance. So let's say, yes, you've connected life insurance now. It's no longer going to your children as beneficiaries. You've chosen the trust fund account as the beneficiary. So in case something happens to you, the money is collected in this central pot. So, and in this central pot, yes, maybe you are the settler, the person who's created this trust fund account, or you and your spouse, because you could do it jointly together. And then now you've had to pick a guardian, because what happens if both of you are not there at the same time? Because you see what will typically happen, because you are just generally the primary guardians, because you have the child. So in case something happens to you, the remaining spouse is able to continue managing the trust account. If something happens to them, you can continue. But what happens if the both of us are not there, right? So you still want some level of now management of this money. That is why you need to now pick a guardian. Now there's that now, as you said, the primary guardian and then the secondary guardian. So this is the person, I always say, just pick someone who will live with your child and you trust them and they understand. Like, please also have constant conversations with this person.
With these people, so that they know what your vision was and that you know what you would want done for your children.
Actually, Susan, as part of this legacy combo, we introduced the legacy tracker, which you can actually put all these things in writing. You just put your things in order. So for anybody who gets the life cover or trust fund through us, we're going to give that. So we'll also share with you how that will look like.
Okay.
Anyway, so it's good now to also put these things down. Where do I want my children to continue going to school? Their religion is also a very important thing when you're picking a guardian. For me, at this point, I'm Christian and I'd want my children to continue the Christian faith. But now, if maybe the guardians you pick are not, unless maybe that might not be an important part for you, maybe they might not be raised as Christians, because now how will they know how to raise your children with the faith that you're used to? So those are things, as you see, it's part of value system, right? And then now, in this instance, the guardian, the only money they can receive, depending on how you structure the trust fund, is upkeep money. So they'll not receive the whole lump sum. They'll not receive money for clothes, for food, I love those are the things that now you need to put into consideration. And then another thing, for people who are like, yes, I will be guardian, I'll be godparent. Have you asked that parent if they have a life cover? Because if anything was to happen to that parent, do you have the ability to take care of another child or two children? Actually, that is the conversation. When people now come to me like, okay, I'd like you to be my godparent, my parent, I'm like, thank you. I'm actually very honored. But we need to have the money conversation, because the reason why you're picking me is something could happen to you and I will be
such a TRG friend.
My dear, let me tell you, after you've gone through so much in life,
now we can excuse you. We can excuse you.
Like, the question is, I'm so grateful and I appreciate it. I'm very honored for you to pick me as someone to take godparent. But the question those godparents never ask is, do I have the financial capability to take care of other kids?
No, see, we are doing it for vibes, for Instagram. What do you mean? Until the rubber meets the road. Then now we realize, Kumbe godparent was not
it's not a small thing. It's not a small thing. thing, because you see now it will also affect now your already existing children. So that's a conversation for another day. But now you see how a guardian can come into play. Still very, very important. But it's rather now connecting the life insurance to the trust fund, and now picking guardians who can not receive the whole lump sum, but just a bit of money for day-to-day care and still upkeep of the kids.
Wow, I like that. You know, every time me and you sit down and have these conversations, I realize who made me an adult? Right? Why do we have to think about all of these things? But it's important. Guys, my part in short is simple. Surely kama unaweza pata trust fund na 5,000 bob, why don't you have one? Genuinely, tuambie tu kwa comment section, why don't you have one if it is that accessible to you? This has been amazing, Mnyindo. Thank you so much.
Anytime.
I know the Laris Africa team has a process in place as to how we can access this legacy combo, because if we are left to our own devices, we will go and look for questionable people to sell us questionable products in the name of life insurance. We will not even know where to get these trust funds from. We don't know the companies. So in closing, maybe you can tell us what you have that could assist the people listening and watching us right now to actually set these things up. I know you guys have a structure in place for that. So maybe you can just let us know as we wrap up.
Awesome. So when you're coming to get the legacy combo, number one, we will start with setting you up with your life cover. What is required is filling in the application form, getting the required documents, which is usually your KRA PIN, your ID, and proof of banking, plus your photo, your passport photo. And to fill in the forms takes less than 20 minutes. It might feel long, but we'll be there to guide you in setting it up. And then when you're done with now setting up the life cover, we'll also share with you step by step on how to best go about it. The next thing after setting that one up, now we do the trust fund account. Still the same thing. What is required is KRA PIN for you as the person who's creating it, whether it's you and you or you and your spouse, if you're opening it together, KRA PIN and ID. And then you also need the KRA PIN and ID of your guardians. Very important. And then we'll also need the birth certificate of your kids or ID if they're over the age of 18 to set up this trust fund account. So to get a life cover, usually it takes maybe a few days, like 2 days, if you don't need medical tests. But for covers over 8.5 million, medical tests are required. So it might take maybe 4 working days to set that up. Usually cash management trusts take about 7 to 10 working days, and then the account is up and running and you can start contributing. So another way people could contribute, especially as a community, is if it's your child's birthday or you want to give to a kid during their birthday or special occasions, you can be sending money there. That's the gift that they will remember. All these matutoys, they'll forget about it. So yes, first of all, setting up the life cover, then we help you set up the trust fund. If you already have existing life insurance policies, we're going to guide you on how you can change the beneficiary so that this trust fund can be the central port where all the money will be coming in, to just make sure that money comes in here and is going to be directed the way it is that you want. And then lastly, as I promised Susan, anybody who's taking up this plan will give them now the legacy tracker, so that you can be able to put down all the instructions with your child regarding your child, from the allergies. Those things we never think about, that if a guardian was to come in play, it would be important in conversation or an important information to have. The values you have, what it is that you envision for your children. And then also now there'll be part of the tracker which also has numbers. But this is only for people who are taking the legacy combo. For everybody else, you'll have to buy it. And yes, so if you want to set it up, just please fill in the legacy combo link. It should be put in the description box, and then we're going to guide you. And then also we've shown now example numbers. It's also going to be in the description box, so you can have an idea. If I only have 5K and I'm 35, what is the level of cover that I can access? So that you can just have a vision, and then you can get started from there. But one thing that I'll urge is, please put your children's finances in order. They did not ask to come here, but they're here now, and they are your responsibility. So you need to make sure that their lives are not interrupted no matter what. Give them a chance to excel in life. And we know that during these formative stages are very, very critical. If there's any interruption here, it could affect them later in life. So just make sure that you are a stepping stone to your child and not a stumbling block. We're going to get our children started from a place of unfair advantage, actually, because many people who have not put these things in place. So you'll be giving your child that advantage, that competitive advantage in life, to just make sure that no matter what, they are good. Whether you're here, whether you're not, doesn't matter. They'll still succeed in life. Yeah. And they won't be taken advantage of.
Wow, that is amazing. Thank you so much, Mnyindo, for always accepting to come.
Sasa ninaanza kukubill.
Utaanza kunibill billable hours. Oh my goodness. Alafu aki unajua sisi tunakanga pata 1 hour.
Say hata sijui nikuja.
1 hour. Now imagine people will still sit and listen. It's amazing. Thank you so much. I'm gonna be waiting on you to send me that link.
Okay.
And guys, mi hata sina la kusema. 5,000 bob, 5,000 bob only. You can get a trust fund, okay? It's not a rich people thing. It's an everybody's thing, okay?
An organized people thing.
And actually, I love that. It's an organized people thing, yeah? As per usual, I've been your host, Coach Suzanne. See you on the next episode of Finance Friday.